So here we are again. Gold position on 23 July. A long position. I was quite optimistic about the gold market, and I was thinking that we are going to go infinitely up due to the sequence of those previous fibs. We had some fib which was smaller than 50. It was actually very aggressive pullback on 29.2. Another one was 50. Then we had two smaller fibs which were 61.8 and a aggressive 29.2 again, and then 50 or below 50 if we count this from the beginning of this impulse. Just let's make it 50. It probably doesn't make a difference at all. And here we had some aggressive move upwards and slow pullback. But this pullback was, of course, a tricky one. If we compare this one to the previous ones on gold, then what happened here usually happened there and not there. So the market was already set for a swing high, for a change of direction. On 1 hour time frame, gold looks unfriendly to me, I would say. So let's switch to 30 minutes. On a 30-minute time frame, we have a little bit more details, but I think we should look at gold if we want to trade it. Day traders, then we should look at it at least on 30 minutes, but below 30 minutes is also good. 5 minutes, 15 minutes is ideal. But for the sake of this video, let's continue to look on a 30 or 1 hour even. So you can see that actually there was strong pull on RSI down, although the price looked quite stable in this range. It should be treated probably as a range trading. And any kind of pullback from there or breakout should be considered as a potential direction of the market. And so we had a pullback to 61.8, which was quite unusual given the last few pullbacks. And then there was a retest of the previous range, not 29.2, and further decline. But gold is a difficult market for Fibonacci trading actually. But it's not impossible to probably trade it with Fibonacci retracement. So I was urged to overtrade. I was thinking, okay, now it's quite possible we just shoot upwards, but it didn't happen. Instead, again, I was being humbled. Additionally, you could see that there was a small head and shoulders at the end, and also on RSI, visible on RSI. Therefore, this is a bearish pattern. So we had a drop after that. I'm not trading very often the head and shoulders pattern. Only recently I noticed that this is actually a better approach to a market. So head and shoulders is a price action pattern, and this is something that every trader should be mindful of. So trading on the top of a head and shoulders, it worked just for a while, and then unfortunately stop loss hit. There wasn't any like candle confirmation. If I was really aiming to enter long, then I should be entering this from a lower places, but again there wouldn't be a really engulfing candle. For example, this one would be, but then we had some bounce and bounce back, and then there wasn't an engulfing candle until actually there. So this was just hopeful trading. There wasn't a good position to enter. Interesting market on GBPJPY. Why? Why is it interesting? I wanted to short there on 16th July. The reason why I wanted to short there is strange, because it's counter trend actually to even want to short it. Like looking at this like that, probably I would be influenced by the size of the candle, by the increasing size of the candle. I don't know why. Why would I short it otherwise? If we look at the price from there, there's clearly volume, a B-shaped volume. Is it a B? If we look at this like that, it's a huge B or even D. So D would be a rotating market, as the specialist from volume profile trading says, rotating market. But let's not get distracted. Volume profile suggests that here is a most orders are being placed. But why shorting it if we have a fib which would actually support longing it? If anything, no engulfing candle, no structure supporting any short from there. If anything, if it is a range trading, I would rather long it as a support resistance kind of trading. And given the original fib, we have a very shallow consolidation around 29.2. So why would it actually want to break that that kind of pattern right now? It was a wishful trading, wishful non-trading. And let's actually, so at some point we would have to switch to this smaller fib because we haven't visited the areas of that fib since many hours. So when we actually do visit 61.8 and disrespect it, it would only mean that this is a ranging market. The conditions are going to be somehow unexpected. We cannot rely on any fib at all because the price is being strongly manipulated, pushed by the central bank of Japan. Some perhaps weakening the yen so that we get or strengthening the yen, even. Yes, strengthening the yen. Why? Because the higher the GBP is, the more yen we get for 1 GBP. So therefore the yen is being strengthened here. So very strong approach by the central bank of Japan to strengthen the yen, and actually at some point succeeding enough to push the price back to the original point of the fib. And then we have our situation, our last situation that we were speaking about. But yes, it was all the time a support and resistance type of trading, and if it's not somehow if it's not somehow strongly disrespected, if the channel is not very disregarded, then there's all the time the consolidation type of trading, support and resistance type of trading in play. And this is something that I would actually avoid personally, following the advice of my mentor. So if it was a support resistance, then it was a false support and resistance play. Let's look at RSI. Why would I actually? The RSI was holding a level it was very oversold. No, there wasn't a logical reason to short it. Let's quickly talk about euro and Turkish lira, or dollar and Turkish lira pair, which I cannot unfortunately access in my trading view, because I have a free version and I have already many pairs, over 30 pairs already. I cannot add any or delete any, otherwise I'm gonna have to purchase again the essential version. I'm gonna do this, but not I don't need this right now. But let's talk about euro Turkish lira. The market for a very long time was a cheat market. It simply was some kind of algo trading, and it gave you a structure like this on an hourly. It was amazing, actually. You could make millions on such pair, and it was trading for years like this. So if someone knew, the person could actually, this was very predictable market, and you could place a pending stop loss, I mean pending order, and actually buy on a retracements and sell at the top. But the problem was the market was giving you just like slight taps into that fib zone, fib golden zone. So it was more like it felt more like cheating than actual trading. So I had some problems with the fees on this market, and I was also very a beginner trader back then, and I didn't even know how to calculate appropriate lot size for euro Turkish lira, because it's quite different lot size than usual like developed market pairs. And actually this was some kind of cheat code for trading, similar to Hong Kong dollar pair. There was for some time the pair was pegged, and you could actually see a amazing curve, and then you could see this pegged on a certain level, and also some traders trying to catch small wicks which were constantly like happening. Once a day there was a slight wick, and you could place the order over here, pending order, and then sell it on top. It was also probably some kind of not very genuine trading. It was not a traditional trading, but something more towards even a cheating. So I wouldn't actually recommend that, but it was quite interesting to see something like that. So it was like USDHKD. Very interesting stuff. But let's now switch to the GBP CHF. So shorting it was a good idea in the shorting market, in the bearish market. We weren't looking at the moving averages for a while, haven't we? And again, tight stop loss. Why actually entering right there? Because I woke up and I thought, okay, this is a good time to enter some short. Why this market? I don't know. So let's focus. Why? Like immediately, if we look at this, we have some fib which would be supporting just the opposite direction idea. It was a 50 fib, but actually this, if we looked at this like that, it does support going short, because we had a rejection from 29.2. It wasn't like direct or perfect rejection, but okay, we have some kind of fib also over there, and it was like almost perfect 61 point 0.8, and a strong candle. Simply the stop loss was too tight. It should be a little bit brighter. I said almost like at least the size and the wicks of the previous or biggest candle in the range. So I would probably it would probably be a winning trade. Other than that, it was simply a trend direction trading. Structurally also good, because you have here some kind of pullback in the upwards direction. It was a very flat pullback to 61.8, but price did not succeed to break above previous highs as much, and so we could see a price weakening, and then this kind of pullback, this kind of fib retracement. So it was a technically good trade. I remember failing this one GBPNZD trade. I was so angry and disappointed in myself actually, but I was trying to place the best stop loss there was possible, but the market faked out everyone that hasn't had a, a capital to actually allow yourself to take a little bit more losses than usual, like the minimum loss per trade. I was back then thinking about Elliot trading, and so it was like in alliance with the Elliot again, first, second, and third prolonged wave, and then we have correction A, B, and C. And so I was hoping that this is not going to hold, which was actually accurate, but we have some choppiness, some undecisiveness, and the market was actually going down, going the direction that I predicted it is going to go. I remember this moment. I remember this trade particularly good. And then I was feeling like so down. I thought that I have it all figured out, but there are always going to be like some small issues like this, and I'm never gonna be profitable ever again, which is actually a very negative thing to think and to say out loud. So a little bit too greedy stop loss placement, although the market structure, like beside that, the market structure printed the engulfing candles in the downside, but I entered here again, and it wasn't actually engulfing candle compared to this one, so I could actually prevent this and wait a little bit longer, not feeling the FOMO, but I was so eager to actually have right. This time I have right. I figured out the Elliot pattern, and then it's probably going to work. So I wanted to enter now, and I haven't paid attention to engulfing candle. If I waited a little bit longer, then I could enter on this engulfing candle and make the same kind of stop loss, and it wouldn't stop me out, and it wouldn't have stopped me out, but here it did. So patience in trading is a key. So my guru, I remember he always repeated that we are here a patient, we are being a patient traders, not a compulsive ones, not a scalpers, not a gamblers. So inside of that trade we had some like presumably nice fib retracement, but it went below 61.8, which was a sign of wickedness or weakening impulse, and so it behaved accordingly. So this was a nice, I would say, counter trend pivotal trading, even because we had here a previous swing high, so it was something on this shape. It was very nice trade. I was very proud to actually call it out and see how the market then went into my desired direction, although I was stopped out by a wick. I wanted to talk about one important aspect of entering position. So why is it important that you actually enter on a engulfing candle, because then you have the highest chance for your trade to go into desired direction of yours. But the most important part is actually not like catching as quick as you can a engulfing candle, but rather the aspect of waiting. This is the most important part. You have to just be like mindful that a retracement, usually a healthy retracement, should last at least 24 hours. So if you see a retracement and it lasts like, okay, it lasts 3 hours, 3 candles, it's nothing, and it's nothing yet. You don't know what is going to happen next. So if you see like at least 24 hours, and this one was the 20 hours, 20 hour, 1 day. So there is no rush. Like it gives you like even 2 days to enter. Like usually you have 2 days to enter position in your strategy if you are swing trading like this, or if you mix a little bit swing trading with a day trading. So there is no rush, there is no reason to feel FOMO. Although, yeah, you might actually feel that if you are working, if you have to go to work, if you don't have time to look at the charts, then I understand why would you feel like that. But you can always check later and learn and be better trader, and there's no reason to feel FOMO. Actually, it's not going to make you a millionaire overnight. I'm still struggling. I'm still just a normal guy and still learning. But look at this. I would argue that I can see over the head and shoulders, but a very weird one, like a curved one, biased one. And this is also something to have in mind. I've seen such a thing in gold very often. And so that's actually it. And yeah, and one more thing, I'm probably spending too much time over this one trade, but you see, you can actually like look at this from the angle of Elliot waves, or just from the angle of fib retracement. And if you look at the fib retracement, you can see, okay, the price failed to reach 50%. So it's going to probably fail reaching new highs, and it's going to end up in some consolidation. But in this case, like symbiosis of this approach is always, of course, better. It's if you are not feeling that you are overcomplicating stuff, then it's a right approach. I'm very proud actually of this failed trade. So I flipped the chart on GBPUSD because I was trying to long GBPUSD in a short term, in a bearish trend. And here is what I found. So when I flip the chart, then we can see actual situation. So we had most currently we had a fib 61.8, which was actually a good perfect fib 61.8 with a strong rejection from 61.8 in a downside. So actually shorting it is not justified to me. there is actually no it's not because of that I was shorting it. It's because of this fib I was shorting it. But this fib wasn't 61.8, it was above 61.8, so it would suggest some confusion, some disturbances, and so it happened like that. We had a reaction from 29.2 of that fib, I mean of this kind of movement. There was this level and it fits perfectly even twice. So there was no doubt we are actually, the steam is towards a downside. And additionally, there is a nice, very nice fib 50, very smooth fib, and then another one on a bigger scale, also 50, which would suggest some kind of troubles with reaching higher levels. But when we tried to make a fib that was actually contradicting this one, it failed. So it was a sign of weakness for this particular fib and gave more strength to that previous one. So therefore the selling market was more appropriate in that case. Yeah, and I most certainly I haven't flipped the chart back then, and that's why I failed, because there is actually some sort of engulfing candle, and it might be reasonable to, might be for someone that that hasn't analyzed this on like this kind of basis, would be actually reasonable to enter a long. Other than that, market structure hasn't suggested yet like decisive pull towards downside, I mean upside, but just rather downside. Yeah, hope it's not too confusing, because for me it is, as I look at this right now. So it starts to even get too personal to speak about this publicly, but never mind. I'm gonna speak about this and show everything. So FOMO, missing the breakout, no structure to enter long, stop loss for scalping in the swing position. There was some problems on the Middle East. I don't remember what was it. Some probably related to iron, or where was it? It was June 23rd June. I don't remember. I can't tell when I don't know. So, but after that, the price consolidated a bit, and we had this kind of breakout. I've been figuring out my trading account. Back then I was very like fresh to trading. I haven't took it seriously before, and this is when I started to take it seriously. So I entered this trade. It was probably Thursday, so Friday. Yeah, it was a losing trade, and I was just figuring the account back then, so I was hoping it's going to work out. So it was hopeful trading, no retracement, no structure to enter. over there we had some structure, actually 61.8, good engulfing candle over there. We could actually enter nice long. When? Monday, very early, 6 o'clock in the morning. So probably nobody is that early around. And I was thinking about placing a pending orders, but the pending orders are like 50-50. Sometimes, you know, you have a lot of capital for pending orders. That's my take on pending orders. So this was the top. Something interesting to mention, like look at these candles. This one candle had 4K volume, and this one candle had only 588 volume, and they were at the same height. So it was a sign of weakness and not a sign of strength. But I wasn't paying attention to that. And actually, we have a oh my gosh, let's change it back to 100 and save. Save as row size. Yes, we have a POC and the price retraced back to the POC on US oil, and also in the range of golden zone. So but we are measuring only this kind of market, like this region. B, shape volume profile, and let's adjust it there, see what happens. It changes. And so we have a P-shape volume profile. So we can look at this like that. We have a P-shape volume profile over there. That's why the price drops. And so it goes. 2 hammer candles, very good confluence to enter. Like 1 hammer candle, and this is a more like doji. So this hammer candle and this engulfing, yeah, it could be. It was a good fib setup over there. GBPUSD. I wanted to long it, but on the 13th June, but I was too greedy and put my stop loss to break even, and it get triggered, although it would be good trade. But why? Let's dive in. So on a bigger scale, we had a 50 kind of retracement. Okay, but the time's up for the recording for trading view, so probably we're gonna continue in the next recording. Yeah, thank you for watching.